What's going on, guys? My name is Richard, and welcome to this week's Stock Market Outlook video. As always, we'll go through the price action of the leading stocks in the market, then we'll talk about the market indexes, how my previous watchlist performed over this past week, then we'll move on to talk about sentiment from a few different sources, and we'll also cover the IBD Big Picture article from this past Friday, and the GMI Signal from wishingwellball.com. So diving right in, let's start with the potential true market leaders. And I do need to update this list. Some of these stocks are no longer leading because they're kind of stuck below their 50 SMAs. And there's some stocks like Fetch, which definitely deserve to be on this list. Starting things off, we've got NEO, which you can see is trending right above those key moving averages, the 21 EMA and 50 SMA. And at this point is definitely short-term extended and had a very bearish candle on Friday, although you can see it's about 10% off its lows, which is very positive. But you can see this is the highest volume in quite some time and might actually be the highest volume ever traded on this stock. So keep that in mind. But the R sign is very, very strong. And you can see a short pullback because of Friday. Next up, we've got SE, which is right at all-time highs and reports next week. And overall, you can see that the R sign is increasing steadily and it's trending above all those key moving averages. NLS, after that gross sell-off, has kind of survived pretty well. You can see it's still above that 50 SMA, although it is below a declining 21 EMA. And next up, we've got PINS, which after this nice gap up on volume has been holding in there nicely. You can see it found support at this line here, as well as the 21 EMA on this Tuesday, and is right near all-time highs. Had a nice green dot on Friday, and is acting very, very well relative to all other growth stocks. Net as well is just going sideways during this gross sell-off and is above all those key moving averages, with the R sign pretty much going flat during this time. Roku, you can see after the earnings breakout attempt, got hit pretty hard early last week, but is hanging in there above those key moving averages, with the R sign going pretty much flat. Twilio is decreasing with a decreasing R sign as well, but is above that 50 SMA, I believe. Let's see, 27,443, and yeah, is just above it at this point. TDOC is right at the bottom of this base here. It undercut it late last week, and there are gaps down on volume, which is a negative for me. Fiverr, you can see, let me hide these drawings here, right near all-time highs, was able to bounce off that 50 SMA, although you do see high volume on these sell-offs, but it's acting very, very strongly and trending above those key moving averages. AMD, you can see, is right above the 21 EMA and 50 SMA, although the R sign is decreasing during this base. CrowdStrike is below those key moving averages, and you can see that the R sign undercut its 21 EMA on this first kind of sell-off here and is still decreasing. Shopify, you can see, is still basing within this range, with the R sign decreasing somewhat, especially lately. Etsy, once again, pretty wide and loose here, and is below that 50 SMA, with the R sign decreasing. Snap is holding up very well, and you can see it's above those key moving averages, with R sign decreasing somewhat, but mostly staying above that 21 EMA. Peloton got hit hard on this Monday and had a very bearish candle on Friday, although it was on pretty low volume. So keep an eye on this one, but you don't want to see it starting to live below this 50 SMA. Zoom also got hit very hard, and I would say that this stock is living below that key moving average, and the R sign has really taken a hit over the past few weeks. Tesla is still forming out this tightening pattern here, but it is below those key moving averages, with the R sign decreasing over this range. SQ as well is managing to stay above those key moving averages after getting hit after earnings last week. TTD is very, very strong. You can see a nice gap up on that earnings, and it barely undercut that low, and so far it's pretty much going sideways during this growth correction. NVIDIA is right at its key moving averages, with R sign taking a hit late last week. CalX is holding up pretty well above those key moving averages, with the R sign taking a hit last week, but overall isn't suffering too bad. ENPH is pretty strong. You can see the R sign is actually increasing from this point over here when it hit all-time highs, and it's above those key moving averages. Melly, once again, above those key moving averages, with the R sign taking a hit on Monday and Tuesday. Apps as well. DDOG is below the 50 SMA and looks pretty bad here, although you do have a nice reversal on its earnings report. But I want to see it kind of form out this base. And right now, this is pretty much the left side of a potential base on base pattern here. XP is tightening up nicely right at those key moving averages, but you do want to see it kind of take those over and also take out this high right here. And the RS line has been decreasing since this point. And finally, we've got FSLR, which is below that 21 EMA, but staying above that 50 SMA. So that's a run through of the market leaders. And next up, let's take it day by day on the QQQ. And overall, we had a gap up on Friday and then a very bearish candle on higher volume, taking out the lows of the previous day. So a bearish engulfing candle. And then you can see we had another gap down on Tuesday, although we did find support at the 50 SMA and retook that 21 EMA. And then we had a nice bar on Wednesday, although on lower volume. And then it's been drifting higher on lower volume since then. So overall, this candle on Monday hides a lot of damage in the growth stocks in particular, and we'll see that when we talk about the FFTY. But overall, from this candle, the expectation is sideways or higher, although at this point we are very range bound within this consolidation, and this is actually very close to a 3-month base on the QQQ, which would form the next green line. So that's QQQ on a daily time frame, and on a weekly chart, you can see if we actually go to a weekly chart, you had overall a down week of 1.25%, the week closing range of 55.7%, and a daily closing range on Friday of 82.7%, and an up-down volume of only 0.8. But overall, we have a nice reversal off the lows here, but you can see it's on higher than average volume, and the expectation from this bar is we go sideways or higher because of that closing range. So that's a QQQ, and next up we've got the SPY, which is right at all-time highs. And overall, we are up 2.27% on this index with a week closing range of 54.7% and a daily closing range of 80.9% on Friday. And the expectation from this bar is we go sideways or higher, and we are in a stage 2 at this time. And next up, we've got the IWM, the Russell 2000, which is also right at all-time highs. And overall, we had a nice week here. We were up 6% on this index with a week closing range of 52.9% and a daily closing range of 77.7%. And overall, the expectation from this bar, which is a breakout into all-time highs, which is very bullish, is sideways or higher. And next up, we've got Bitcoin, GBTC, the trust. And overall, this is breaking above this short-term consolidation here. And the expectation from this bar is we go sideways or higher. And look at all the volume coming in on these previous weeks. This really suggests accumulation. Moving on, we've got the Dow Jones, and overall this also challenged those all-time highs last week, and we're up 4.21% with a weekly closing range of 57.9% and a daily closing range of 78%. Next up, we've got the FFTY, and overall we're down 4.81% with a weekly closing range of 41.9% and a daily closing range on Friday of 38.8%. And if we look at a daily chart, this really reflects the weakness, especially on Monday. Look at this bar here on higher volume. And overall, this is a very negative sign. And right now we are below that 30 SMA. So next up, we've got gold going back to a weekly chart. And overall, you can see it found support at that 30-week moving average with a weekly closing range of 84.6%, and a daily closing range on Friday of 33.3%, and overall a down week, down 3.29%. Next up, we've got the VIX. And overall, you can see it did decrease actually last week, which is a positive for the overall market, despite the weakness in growth stocks. And overall, it was down 7% with a weekly closing range of 14.2%. And lastly, we've got the XLF. And overall, we had a big jump this week, up 8.29%. It's not a good sign when the financials are leading, but overall, it's good to see the rally spreading out. And we had a weekly closing range of 62.4% and a daily closing range on Friday of 70.3%. So overall, from the indexes, they're mostly in stage 2 uptrends above their increasing 10-week and 30-week SMAs. But at this time, we do see a lot of weakness, especially in the QQQ and the FFTY. So that is a run through of the indexes. Now let's move on to my previous watch list. And overall, storing my universe list, you can see the best performers were PDD, CellH, FLGT, and Plug, but you don't have many up over 20%, which is a little bit rare actually for this year. And looking at my focus list, you can see only 2 are green, GRWG and FTHM, And overall, you can see this right at all-time highs, a breakout on higher volume, very bullish. FTHM right near all-time highs, although it did decrease from its earnings report last week. Coop is consolidating still. QDEL had a big gap down on volume. This is a no touch for me, below the 50 SMA. AMD, where I covered. Etsy, we talked about. Snap, Peloton, Tesla, NVIDIA. TAN is hanging in there very strongly, so there is some strength in solar overall. Apps we talked about. Snow is decreasing below that 21 EMA. You can see the RS line is really decreasing, and overall SAM is holding above that 50 SMA. So overall, not a good week for my watch list and growth in general. And next up, let's talk about sentiment. So overall, going to my surveys on Twitter, you can see that we had a drop this week, down from 56.2% bullish to now 49.4% bullish. So there is an increase in bearish sentiment. And next up, you can see, looking at the NAAIM exposure index, that this is pretty high, which is one negative. And next up, we've got the bulls versus bears poll. And you can see this actually is increasing at this point towards 60, which is, once again, a negative. But keep in mind that sentiment is always a secondary indicator. And lastly, we've got the put call ratio. And overall, this is decreasing at this time, which is a negative in terms of sentiment. But once again, this is secondary. So moving on to the IBD Big Picture article, you can see that the headline is U.S. stocks rise more than 1% as coronavirus stocks need a rethink. And overall, they talk about how the U.S. stocks climbed 1%, although industry group performance showed that the coronavirus trade continued to unwind. And overall, they talk about the rotation into those laggards, those broken down stocks, the travel, department store, consumer, and cyclical groups. They talk about the weakness in Zoom and Shopify in particular, and you can see a really bearish candle here. And moving on, they discuss the strong action overall in stocks. You can see that the advancing stocks led decliners by nearly 5-1 on the New York Stock Exchange on Friday and 3-1 on the NASDAQ. So despite the indexes being a little bit weak, there is a lot of strength hidden behind those larger cap names. And you can see that the Russell 2000 is leading up 2.1%. And you can see how coronavirus worries still hang over the US stocks. So at this point, you can see they still have a confirmed uptrend with 2 distribution days on the NASDAQ and 1 on the S&P 500. So lastly, let's take a look at the GMI Signal, which is still green. And overall, Dr. Wish talks about how we're still range bound, but we are in a red, white, blue uptrend with the GMI score on Friday of 5 out of 6. So overall, taking everything into account, my view is we're still in a confirmed uptrend, but a lot of the past leaders have kind of broken down. You've got Zoom, Peloton below their 50 SMAs, which is a negative for the overall market, but that just might mean that new leaders are going to emerge and kind of take their place. So I hope you guys enjoyed this video, and if you did, please go ahead and leave a like down below and subscribe if you're new, and I'll see you guys in future videos.